Okay, I'm taking a look at gold here. It's doing nothing, and I'm going to tell you why I think it's not doing anything. Now, this situation that I just drew out here has structural possibility, but to bring this to material reality is going to take a policy error by the Federal Reserve. So this range right in here, 1,000 to 2,000. So they've kept the money, relatively stable. This gold isn't an inflation hedge. This is just a hedge against a Fed policy error. And all the Fed does essentially is create liquidity. Technically, it's not creating money, even though I tend to disagree. But, Lacey Hunt is smarter than I am, and the way he describes it, I tend to like, okay, I'm gonna be okay with that, even though they're creating the money. But it's not, like he says, technically a liability is not legal tender. So they create reserves, not cash money, which to me it doesn't make any difference because then the banks can create whatever money they want, and the Fed is incentivizing it with the creation of reserves. So, but I guess technically it's not, it's a reserve, it's not a cash. It can't be on the Federal Reserve's balance sheet. So, okay, I get that. But I think they're going to make a policy mistake because they don't seem to me to be entirely, you know, insightful individuals. And I think, we need a certain amount of money in society for it to function properly. And I just don't think they're actually aware of the needs of society is the main issue why I think they're going to make a policy mistake. But look at here that we're talking about time frames now. You see where this is going? This thing could break out like right here, which would put the breakout at, 2023, midway through 2023, or even the beginning part of 2024 is where you're going to have to wait this long and choppy grind it out because the potential of this structure, this price structure, and what it suggests, this abstraction of the real world event of a policy error, what it suggests is going to take time to play out. And there's no guarantee that it'll have to happen. Look, the Fed, they might thread the needle and get the policy response just right, and gold is done. I don't think that'll happen, but hey, why not? Why not give this thing a double top, okay, and this thing just goes straight down? That kind of a move. It's totally possible. We are not in the clear yet, gold bugs. That kind of thing would just decimate the gold bugs. And it's possible. The Fed is a 100-year-old institution. It was created in 1913 for the purpose of creating liquidity. And that's what it's been doing for 100 years. And they tacked on later that second mandate of, employment. I think that was after the 29 crash. They tasked the Fed with kind of also being concerned about employment because nobody else really knew how to take care of that other than, and then Keynes came along and told them all you got to do is print the money, which, I guess it's fine. But this is what I'm looking at with gold, not in the clear. I don't like to be in this trade, but I am in this trade. And I'll tell you what, I got into this trade like in this range, right in there. And so it's been a long, so I caught this move, that one, this up move here. And I had nothing since then. This was the only really big trade I've had. I'm in this trade still. I don't like to be in this trade. I'm in it. I'm pretty heavily involved in it. It's the only real success I've had was when I got this move there. But, and I'm in it with the miners and some of this GLD and a bunch of other nonsense I ought not to be in. But this is how I've come to interpret reality. And, that's just an introverted thinker's way of expressing what I think is going on. Behind this abstraction of price is this consolidation up in here, this little tightness is just showing all of us getting all eager to see if the Fed makes a mistake or not. They very well may not, in which case that's going to hurt. So there you have it.